Hey traders, this is Ron Hayat, Market Tamer. Happy Monday from out here in Viva Las Vegas at the Traders Expo. Hope you guys had a great day. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed with your financial advisor. Markets had a tough day today. Dow was down over 2%, nearly 600 points. Closed at 254.22 on the DIA. But what's most notably is we just closed back below three moving averages in one fell swoop. The 50-day SMA in orange, the 20-day EMA in red, the 5-day EMA in blue, lost them all. And we closed near the lows of the day on a pickup in volume. Now we could say this is starting to look like an inverted head and shoulders, right? Left shoulder here, head down here, then potentially the formation of a right shoulder here, potentially. Right now, the downside target is the 200-day SMA, which is right around 249.36, according to Profit Charts. So if we just say 249 something, that's still 500 points lower. So we're looking at basically another move like today, and then we would get there. If the 200-day can't hold, we would go back down here to these closing lows just under 245. So this is getting interesting right now. I mean, frankly, going into today, the bulls had the edge on the diamonds. Not after today, bears got the edge. Here's the SPY, which I have a bullish position in. Lost $5, 1.87%, closed near the lows of the day, and lost the other three moving averages that it was just above. This is also potentially forming a right shoulder, left shoulder, head, right shoulder. So I want to see if there's going to be some kind of reversal here. Volume was equal to Friday, so it was nothing extraordinary, but nonetheless, we just broke support. Target right back down here, 264-ish area. Take a look at the Qs, down 3%, over $5. There was a pickup in volume, wasn't massive compared to what we saw a couple weeks ago, but big. Target down there around 163, another 3, basically about half of what today gave, maybe a little more. And then we'd be testing that support level. If those lows fall, it could be maybe an ugly heading into Thanksgiving type of event. Now, IWM, Russell 2000, down just under 2%. It was above its 5 and its 20-day midweek last week, but Friday we closed below. So now today we just added to it. Volume was light though. 21 million shares in the IWM is not that much. So the target down there maybe 146, 147. Take a look at the MDY, which are your mid caps. 1.57%. So they didn't get beaten up that bad, but they still broke back below moving averages. Volume today on the mid caps, not that much. But you know what? Support's down there at 325, another 12 points lower, which is over twice what today was. With the markets rolling over, you would assume the VIX was spiking. It did. I thought it might have been up more, but we still finished up 17.80% higher, and that is giving a U-turn. This is now a bullish move. You can't use the VIX as you would maybe stocks for support and resistance. It doesn't quite work that way. They're just different vehicles, but we are not overbought on the VIX, which would be oversold on the equities. We're not even in the middle of these bands. This thing could shoot way up here, up into the 26s and 7s before it would even start to get a little overextended to the upside. And then a spike would probably be up here near 30 something. That's one very cautious thing to look at right now in the markets. The bears have the edge now on all the majors on these daily charts, even going out 20 days. Be careful. So if the markets are imploding, the stock market is imploding, you ask the question, well, what did it run into? If the market is topping, they must have just, ran out in droves to pick up TLT, the bonds. Yeah, they didn't. The bonds were up 0.65%. Volume was pathetic considering if this was the safety asset. So yeah, there was a rally today in TLT. It did not finish the highs of the day. It did not occur on big volume. So the theory that they ran the bonds just isn't true. It's false in comparison to the selling pressure. What about gold, silver? Oh, they had to be buying precious metals, right? Yet no, down 0.72%. Heading back down to 112.50 for support on GLD. SLV lost over 1%. It's already testing the support from September, and on a closing basis, we just closed to new near-term lows again, going out 6 months. If I bring back 5 years of silver, support is essentially right at 13. We're only 17 cents away. If I go back 10 years on silver, I mean, look what we're doing. We're heading back to decade-type lows. So no, they're not running to the metals. I still think stocks are the only game in town. Market just needs to sort of settle down and calm itself a bit. But short term, bears have the edge in equities. How about NVDA? This thing got beaten up another nearly 8% today. And keep in mind the earnings report, 11:15. So that's on Thursday. I'm actually flying back home that day. So there'll be some fireworks while I'm in the air. The low from 1029, the closing low, 185.62. We're only $3 from there. So that's not much at all, which ties in with the December lows. If things get, worse this week, this thing might break, multi-year support before earnings coming up. Here's support. I mean, there's really not major support until there's a gap fill at 100. That'd be extraordinary, but right now, these charts are definitely bearish. How about Apple? Lost $10 today, down 5%. That 200-day moving average is like the siren calling the sailors, It looks like we're just gonna get there. We're now only $4 away, a couple more percent, and we hit it. Volume did pick up today on Apple. There was allegedly or reportedly some news on suppliers not seeing the demand, and Apple just sells right off. 190 would complete that gap fill from August, and that's what I've been talking about here for a while in these videos. Let's take a look at the Google Meister. Only down 2%, $27. It's got a lot of support at 1,000. It's $50 away. Hey, 2 more days like today, and it's there. 1,000 would be the big round target on Google. Amazon, $75 loss sounds like a lot, but it was only 4%. 1,500 is the target. That was the previous low from back on 1030, and then we come back down to 1,400. Again, big round numbers. Take a look at AMD. This is a stock that the seasonality worked like an absolute charm on. Literally got the peak in September. We hit the 200-day, we bounced, but look what we can't get over. We can't get over the 20-day EMA in red. So if I'm a trader on AMD and I see how we essentially failed last week, it's got to get over the red line. For me to even think about being bullish technically on the chart, we've got to get above that red line. If it breaks below on a closing basis, the 200-day moving average in purple, that's institutional. That would not be good. But there's a little bit of support, 16, more support at 15. It wouldn't be good, right? That'd be very bad. But the other support's sort of close by. So from a downside perspective, it's sort of hard to get there's not a lot of distance between where it is now and where support would be. Yeah, 200-day is bad, but there's other support levels that are going to complicate things. I think the bigger move here is on the upside. So watch that 20-day EMA. Closes above there, I might consider to be bullish at that point. That's it, folks. Wish you guys a great rest of the week. If we have another big move tomorrow, we'll do another video from here in Vegas. So far, I met a few of you folks. Tim and Joel and some others. That was awesome. I love meeting folks in person. So if you are here and you want to meet up, just send an email and say hi, and I'll catch up with you. So have a great day, gang. See you next time.